Good evening, everybody. I'm Pierre Roberge, the Daily Trader. It is November 29th, and we are going to take a look at Tesla stock from a technical analysis perspective. My goal in doing these videos is to help you understand how you can use technical analysis to make better trading and investing decisions, but I'm not a financial advisor. So please do your own research and make your own decisions. Okay, so Tesla had a pretty good day today, so we are up 55 bucks. That's 5.09%. We closed at 1136.99. Post market, we are up another $2.48. Let's look at what this looks like on the chart. Only when we are looking at the chart, we can understand the context of this move. We are in this almost ascending triangle. It's not a symmetrical triangle. This line here is steeper than this one here. It seems like the stock is going to head up higher eventually, and maybe sooner than later. Don't act based on what I say, act on what is actually happening. So if we break, this is a time to go in. You can also try to go in when a stock is hitting on a support. We made a higher low and a higher high also, and we had been following this resistance. I'm trying to, at 1116.82. So 1116.82 was a resistance that was quite important, and we broke it. We broke it today. It was a pretty good day, so it was enough to break it. We just need to keep in mind that we have this resistance that is just right here. So the stock might be just going up here and maybe coming down again. Or if it's strong enough, it can just break again right now. Let's go see the 1 hour chart. We closed yesterday right here. So we were on 1079.82, and we were getting pretty close to this support right here. This support right here. And everything looked pretty down. MACD, DMI, stochastic was also especially down at 15. We would not have been surprised if the stock would have gone down to this support right here. But Tesla does this thing often where it does not go down to the support and finds the support a little bit higher than the main support. So I've seen that in here where the stock would be bouncing away from support. So giving us a little bit of a different sense. So see right here, we have been touching this line of support on May 19th, also June 3rd, but here, June 16th, no, the stock was quite a bit higher and decided to go back up. And also here, it descended right here and it decided to go back up. And now, only now, at that point here on July 19th, it touched the real main support. This is what has been happening here. I would have expected the stock to come back down here and then resume, but no, the stock was strong enough. It was strong enough to gap up on the 1 hour chart, to gap up and just make a nice green candle on the 1 hour chart, breaking this descending resistance that we have had. And along with that descending resistance, after a couple of candles, we had a confirmation from Stochastic over 60 that this move is legitimate, is strong enough, and it's a real move. And we have the confirmation with MACD. Tesla is quite strong, and it is unexpectedly strong, I would say. But this resistance has been broken. So this is a signal. So it does not matter what we thought the stock would do. It just matters what it does. So when it does this and you are looking at it on the 1 hour chart, then you can just get it. Going back to the daily chart, what happened to Stochastic on the daily? So Stochastic at 59, very close to 60. So this is giving a little bit of a legitimacy to this move on the daily chart. What else? MACD still negative and DMI still positive. So what can happen? Because the stock is now getting in a tighter range. So we had the big range right here. And as we are getting into this triangle, the range of the stock is getting tighter and tighter. We really need to be careful and not look that much at our indicators because our indicators work when the stock has time to make the moves. And now it's getting tighter and the stock is zigzagging almost every day. So the indicators, which are looking past 21 days and 14 days and 12 days and 26 days, don't have enough time to react. So we should be relying on our indicators a little bit less in these times. We should switch back, at least on the daily chart, we should switch back to the gold support and resistance. On the 1 hour chart, then that's a little bit of a different story because we have a lot more candles with which to play with. There's less of this concern of not obeying to the indicators right now. But as we get in here, then we are going to have the same problem as what we have now on the daily chart. So let's just keep in mind a little bit that on the daily chart, the indicators are a little bit less important right now, but on the hourly chart, we can still rely on them for maybe a couple of more days. And then we should switch back to the support and resistance. And this resistance right here is really an important one, that we are going to need to pay a closer look to. Thank you very much for watching. Thank you for liking, commenting, subscribing. You can become a YouTube member because today is Cyber Monday. So this is the perfect time to click on my TradingView affiliate link and get the paid subscription that you've always wanted to get. You can have 60% off. So this is the time to get into TradingView now. We are going to talk tomorrow and I'm going to tell you à la prochaine.